Steakhouse chain Morton's gave investors and Wall Street news to chew on last Wednesday, announcing a possible sale. But will higher commodity prices scare off potential buyers? In a first on Fox Business interview, Morton's Restaurant Group CEO Chris Artinian joins us now. Chris, it's great to see you again. Stock got a real pop off of this news, jumped almost 16% immediately after the news of the sale broke, possible sale. So where do things stand?
Well, nice to see you again also. You know, you're right. We released last week that the board of directors decided to pursue strategic alternatives. But I think it's just a sign of where the economy is going. I mean, we just coming off of 4 quarters of positive comps. Business travel is up. And we have a lot of exciting things going on. We just opened it up in Uptown Dallas. And as you know, last time we spoke about opening up in Shanghai. So I think it's just good time to explore these alternatives.
But going back to the issue of potentially maybe going private, you would not be the first or the last company to go private, to make the choice to get away from the public markets. Do you think that that's a better option at the end of the day for Morton?
You know, I think it may provide certain flexibilities, but really at the end of the day, I think the company is just looking at what the alternatives are, where we are today in our business. So I think it's really undetermined.
There's a price of $17 a share being floated around in the analyst community. Can you respond to that at all, Chris?
I cannot, but yeah, well, I'd love to see it. Listen, we think Morton is a great value. We've been around 33 years. We've been doing high-end steak and wines for a long time, so we're excited about what's ahead of us.
Okay, had to ask.
Yeah.
Jim's got a question.
And I would say, just looking at the numbers, it seems like an attractively priced stock, and you're sort of in a sweet spot here where the economy is recovering, your type of customer is doing much better, and you got this opportunity in China. I mean, if I were a shareholder, I'd say, boy, it better be a very good price before I let the private equity guys make the money.
Well, I think we're a great value no matter how you look at it. We've been in China for over 12 years in Singapore. We started there. We have a real platform of operations now. And our international growth is really focused on there in the coming years. And we're actively looking for sites out there as well as domestically. So I think Morton's is really positioned not only to grow sales, but it's a great value for whoever's going to look at it.
Well, I say the $17 a share because that's what they're saying. Your investors really need to make a sale worth it. So I just want to put that out there and make sure that's clear. Let's talk about the overseas market in particular with commodity prices. I mean, cattle prices have been going through the roof over the last year in particular, but also with the Japanese situation, the Kobe beef price market is now, there's questions of whether American restaurants will continue to even serve true Kobe beef. What are you hearing, and what are you going to do?
Well, the question of beef prices and commodities, I mean, you all were talking about it this morning and where fuel's going and everything. It's real. What we've been able to take some pricing strategies. We're very fortunate that in the segment that we have, people depend on the best. We offer USDA prime beef, which is the best anywhere, and we certainly serve the best steak anywhere.
But you had to raise your prices.
No, I was just going to say, we have a little bit of price elasticity.
Okay.
But our guests come to depend on the best, and we're fortunate that we can pass some of that on.
Yeah, I was going to say, competitively, big urban markets have a plethora of steakhouses. If you had to describe your strategic advantage versus some of the other ones, what would it be? And then secondly, I just want to ask you, could China be bigger than the United States for you at some point?
You know, I think it's undetermined of how big China could be. To answer that question first, we're very excited about there. When we opened up Shanghai, I was out there for a couple weeks. The optimism out there is just fantastic, and we really look forward to exploring opportunities. But we could see many Morton steakhouses in that part of the world. As far as our competitive advantage, 33 years. We absolutely have been relied upon as the consistent best steak out there and the best experience in the hospitality and the people that we have. We enjoy some of the lowest turnover in the industry. We really make a difference in the guest experience, and we've been doing it for a long time. We have tremendous tenure. I've been with Morton 16 years. We have our co-founder who's still with us, Klaus Frisch, for 32 years. We know what we do, and we take care of our guests.
Before I let you go, you did make another move since last time you and I spoke, and you've got a PGA sponsorship now. You put down a big chunk of change, Chris, for the PGA.
Yeah, we're so excited about it. I mean, Morton's a great steak, great wine, and great golf is really where it is at. But the PGA Tour, we're so excited. Their culture is so aligned, and we're going to do some great events and raise some money with the PGA Tour as well this year. We're very excited about that.
All right, Chris Artinian, the CEO of Morton's Restaurant Group. And next time you come on Fox Business, it might be to break some news about a sale of the company. You have an open invitation, sir.
I appreciate that. It would be always nice to see you again.
Thank you, Chris.
Thank you.
Chris Artinian. All right, we're going to take a break. Concerns growing over